Adani-owned Ambuja Cement climbs nearly 2% as it has gone ahead and acquired Penna Cement at an enterprise value of over 10,400 crore rupees. Brokerage firms issue mixed calls on the stock. They say the deal will help Ambuja Cement to strengthen its footprint in South India.
Vedanta rallies after brokerage firm Investec upgrades the stock to hold and raises its target price to 473 rupees a share from around 270 rupees earlier. They cite multiple triggers, including a potential demerger.
GMR Airports climbs as Jefferies adds the stock to its India long-only portfolio.
Sugar stocks continue to surge as sources suggest that the government is mulling a higher MSP for 2024-2025 season.
Suven Pharma surges after the company plans to acquire CDMO player Sapala Organics for 230 crore rupees.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Join me as always is Mangala Malu, and the markets that were trading a little bit lower. Well, we've seen a good recovery. The Nifty is now higher, the Nifty Bank is high, and the breadth of the market as well in favour of the number of stocks advancing. So Mangala, good times for the markets.
Good times for the markets. Today's dip was bought into and now we're upwards of that 23,400 mark. The Nifty Bank to holding above 50,000. The question is where it goes in the second half of trade. The mid-caps do continuously well. But it is the ceramic companies which are on our radar, as we understand that they may see an improvement in their financials in the upcoming year, with gas likely to enter the GST regime. So to discuss this, the implications of this and more, we have with us Abhishek Somani, the MD and CEO of Somani Ceramics, joining us on the phone line. Thanks a lot, Abhishek, for joining in at a short notice. What we understand from our sources is that the GST Fitment Committee is looking to study the bringing of natural gas under GST either into 12% rate or the 18% rate. Just wanted to understand first, what is your current fuel mix between gas and propane, and how will this GST, if it does come under GST, how will that help you?
So first of all, old saying, "Aapke muh mein ghee shakkar." This is something which we've been asking for a long time, and this is something which is up for the industry. This is the only particular fuel which we do not get an input tax credit for, right? When we use propane, when we use LPG or any other kind of fuel, we get an input tax credit. So we've been asking for a long time for this. The government did say that, city gas is different. So we did mention to them at that time that city gas can be treated differently and industrial gas can be treated differently. Your second question was the difference between propane and our gas mix. So in Gujarat, where we have most of our plants which is very fungible between natural gas and propane, we have 6 plants there, 4 of which are running on propane, 2 of which we don't have tanks that run on natural gas, supplied by GSTC. The difference is only about a rupee and a half right now. In the south, we have only spot gas. In the north, we have gas from GAIL. So that's our gas mix, and it's around the 47-48% average.
Okay, hi Abhishek. Good morning and thanks a lot for joining in. Well, if gas comes under GST, how would it impact you? If you could tell us what would you get in terms of input tax credit?
So we get input tax credit of gas is a large part of our mix. I mean, 30% of the fuel is gas. So this is the only input. This is the only raw material which we don't get any input tax credit on. So the same benefits which we would get for the rest of the raw materials, we get for this.
I just wanted you to
become that much more seamless in terms of. So today, for example, when we buy gas in Delhi, if we had to buy gases from 2 different sources, one landed in Delhi, one landed in Haryana, the taxation is different. So it just make even the taxation common for all kinds of gases.
No, what we're trying to get at, both Nigel and me, Abhishek, is what would that number be? If you're saying 30% of your
I don't have a number on that. We haven't even calculated it because we don't think this would happen. So
back of the envelope calculations would suggest about 6%. Why do I say that? Because 18% of 30% of your business would be about 6%. And that's what the Morbi Ceramics Association said to us as well, that if it does come under GST,
so then,
the benefit of
it must be correct. So if they have said it, if they said it, then it must be correct. I really 6%. Don't have that back of envelope calculation. I'm sure. I'm not committing to it, but if they've said it, then obviously they've said it with some intelligence.
Okay, all right. Let's get on with business then. How are things shaping up? The elections is out of the way. So now we can have a better sense about volumes. For the year, what kind of volume growth are you working with?
So for the year, we have predicted low double-digit kind of volume growth is what we're looking at. Growth is what we're looking at, and largely through volume itself. First quarter, obviously, because of the elections, it's the intense heat. It is quite a washout kind of a quarter. So we're still hoping that we should have a little bit of a growth in this quarter. But I think the momentum will catch only by Q2 and mostly by in H2.
Right. And what about margins? You have factored in about 1.5% on EBITDA margin improvement.
That's correct.
Were this to come through, how would you treat it? Would you pass on the benefits entirely, or would you keep some and then maybe, increase your margins further?
It would all depend on how Morbi reacts to this. Largely, a lot of the pricing is followed there, but I think in the value-added products, we should be able to return quite a lot of it. Because the value-added products, we really don't compete too much with Morbi.
Okay, so 1.5% is in the bag, and if any more comes, then that will just be a benefit because you will see value-added, the entire benefit of value margins on value-added, the rest you will follow Morbi.
Frankly, we don't see this happening immediately, so therefore we really haven't calculated anything on it. The 1.5% also, which we are saying, is on capacity utilization, increased capacity utilization. Last year we did about 83% capacity utilization, and now we're looking at slightly higher capacity utilization for this year, which would improve margins. And also on the other end, we are hoping for more premiumization, which will again improve margins. So that's the 1.5% we're looking at. And this particular thing, GST, we really haven't, gas and GST, we haven't calculated. Because we really don't think it would happen. It's been promised for so many years, but it's not happened. So we want to, account on it.
All right, Abhishek, what about, sanitary ware as well as faucets? What kind of growth are you looking at over there? And how much can they contribute as a percentage of your total business?
So there we're looking at higher growth because we're at a much smaller base. There the challenge is a little different. The challenge is the growth challenge is more because the brand is not recognized as a sanitary ware brand. When you think of sanitary ware, you think of the other 4, 5, 7 brands. Similarly, when you think of tiles, you think of us. So that's the challenge, and there the brand is also visible. So there is also, the consumer wants to buy something which is, which is maybe of a certain stature at the higher end, of a certain stature at the middle end, etc. So there we're looking at approximately high double-digit growth. How much percent it will be of our business? It will be nothing more than 10 to 15% of our business even going forward. Why I say that is because sanitary ware finally gets only restricted to the bathroom. The faucets get restricted to the bathroom and some parts of the kitchen. Whereas tiles, we still haven't scratched the surface. Currently in India, tiles are still an indoor and outdoor patio, footpaths, etc. But we still haven't scratched the surface of getting tiles into facades, getting tiles into heavy traffic areas like bus stations, railway stations, etc. So long way to go for tiles. Right. So applications for tiles are much larger than sanitary ware.
Final question before we let you go. Everyone's been talking about, perhaps some sort of recovery in the non-urban, non-metro places of the country, some green shoots visible out there. What's your revenue share from beyond tier 1 cities and how has demand been there?
So demand, we again believe that demand will be largely led from the individual house buildings, individual house owners making buildings, and also real estate coming up in tier 2, 3, 4, 5 towns. For us, it's approximately 70% of our revenue comes from these towns, and we are very, very bullish on all of these towns. This year, again, it's coupled with the Bangalore, Mumbai, Delhi is also shaping up very well in real estate. So whatever real estate had to be sold is sold. All new stuff which will come in, tiles will start getting applied from H2 onwards for the next 2 years. So good times to come for us.
All right, good times to come for you, for you all. You started out by, giving me the aapke muh mein ghee shakkar thing, but at the same time, for your own self, you're saying that let's not count our chickens before they hatch. So you are hopeful if that does come by, that's a positive. Yes.
Absolutely. For 4 years, we've been asking for it. So I really hope they do that.
All right. So if and when that does come, we expect you to join us immediately thereafter and give us all the numbers. By then, you would have obviously calculated them as well.
Sure.
Okay. All right. Abhishek,
so
appreciate you joining in. Thanks a lot for helping us out with a quick analysis if in case this good news has come about for you. By the way, for the markets, things have improved actually. HDFC Bank and Adani Ports, both of them, they are the top two gainers actually from the Nifty in the last 20 to 30 minutes, both of them moving to the high point of the day. For the time being, we'll slip into a short break. On the other side, we'll be joined by Manas Jaiswal. Stay with us.
Welcome back. We have two heavyweights batting for the Bulls right now. Apart from HDFC Bank that we earlier spoke about, look at Reliance. That's moved to the high point of trade. And the other one is Infosys. The IT stocks are now waking up. The first few minutes of trade, the first half an hour of trade wasn't as much for the IT pack. Infosys as well was in the red for most part of the session so far and now has moved into the green and moved to the high point of trade. So let's see how the IT pack pans out as well. So Reliance, HDFC Bank and Infosys, if all of these start to support, then maybe we could see the market break out of this range that it currently is in. But is that on the cards? Well, let's ask Manas that exact question. Manas, we have been consolidating here for a while, facing resistances at levels between 23,450 and 23,500. Where do we go from here? Do you think we will break out, or maybe again there would be consolidation?
Good morning, Mangalam. So we have seen V-shaped recovery last week, but I think this entire week we have seen some consolidation. But looking at the today's move, I believe that soon Nifty can break the resistance of 23,500 and it can go and test 23,750. So even from current levels, you can see almost 300 points rally. So I think now one should take a long position here in Nifty. Keep your stop loss below 23,300 and target would be 23,750. Even Bank Nifty is looking interesting now because today it has tested its 10-day moving average. Now, I think this time it can break the resistance of 50,200. So here also you can take a long position. Stop loss should be around 49,750. And here you can set the bigger target of around 51,000.
Okay, got that. Both those two targets on the headline index. What about individual stocks, Manas? What are you looking at?
Good morning, Nigel. So first one is a buy call on HDFC Bank because this is a fresh breakout on the charts. The stock has been making higher tops and higher bottoms from last, I think, 7-8 trading sessions. So in HDFC Bank, one can take a chance, take a long position here. Stop loss should be around 1580 and target would be 1625. And second is a buy call on ICICI GI where we have seen a fresh breakout with great volumes. I think one can take a chance here also. Stop loss should be around 1709 and target would be 1825.
All right, Manas, thanks a lot for joining in, giving us your views on the indices as well as individual stocks. With that, we'll get some ideas for profit coming in from our colleagues at Money Control Pro. This is a special segment. Nitin Sharma joins in today.
Today's idea for profit is emphasis. In the Q4 FY24, company delivered a revenue growth in line with the expectations, but after missing a street estimate for last couple of quarters. Dollar revenue grew by 2% sequentially, led by the TMT, logistics and BFSI vertical. EBIT margin at 14.9% was below expectations, but well within the guidance range. Deal wins slowed in the quarter to 177 million. Management commentary suggests that deal conversion has begun picking up in the quarter and ramping up should continue. Emphasis has been seeing tailwinds due to the large exposure to BFSI vertical and the US market, where the discretionary tech spending has been weak and project delay has been seen across the industry. News reports suggest that IT services clients are keen to prioritize budget deployment to AI-led projects at the cost of traditional IT contracts. Still, situation is improving and trends as hyperscalers suggest that digital transformation and cloud-led deals are likely to see brisk flow. BFSI sector also seeing improvement, with IT spending of the top US banks gaining pace and therefore likely bottoming out of the headwinds for the sector and the Mphasis. Mphasis currently trades at FY26 PE of 23.8 times, which has not seen run-up unlike the broader market. Nifty IT index has underperformed the Nifty 50 index. Investors are suggested to build position in the stock gradually.
All right. Thank you, Nitin, for joining in. Mphasis ended at the high point in yesterday's trading session as well. An idea for profit. Take a short break, come back, get you more on the markets, stock-specific action, a deep dive into the big deal that took place yesterday. Welcome back. Let's talk about the big deal that took place yesterday. In its second big ticket acquisition since entering the cement space 2 years ago, the Adani Group will buy or has announced that it will buy Penna Cement for an enterprise value of a little over 10,400 crore rupees. Nigel has moved across to the wall to tell us more about this. Nigel.
Well, that's right. The Adani Group has acquired Penna Cement at an enterprise value of around 10,422 crore rupees, which will be funded via internal accruals. For Ambuja Cements, well, it adds close to around 14 million tons. It takes its capacity to around 89 million tons, which puts them on track to hit the targeted 140 million tons by 2028. It also improves Adani Cement's market share pan-India by close to around 2% and in the South India by close to around 8%. Now, Penna's cement capacity, well, it's located in Andhra Pradesh and Telangana as well as in Rajasthan. The total is around 14 million tons, of which 4 million tons is currently being completed. Additionally, 90% of Penna's cement capacity comes with railway sidings, and also they are supported by captive power plants and waste heat recovery systems. So, which is good news, right? Now, valuation wise, it's done at around $90 per ton for around 14 million tons capacity. But the management has said that they have surplus clinker at Jodhpur, so they can add another 3 million tons of cement grinding capacity. For this 3 million tons, we are assuming roughly around 1,000 crores, which means the deal is done at an EV per ton of around $80 per ton, if you're assuming the 14 plus 3 million tons, so a total of around 17 million tons. So to sum things up, well, it's a good deal for Ambuja Cements. The cash in its books is getting utilized, so that will help in boosting their return ratios. They're getting an asset which they're looking to ramp up and improve the profitability as well. And also they're headed towards a 140 million tons targeted capacity. We also have seen that there is a bit of a positive rub-off, on stocks like Sagar Cement, because it's a similar size and trading at a discount. The other ones that could see some positive rub-off will be NCL, KCP, India Cements, as well as Orient Cement. Why? Because they have exposure to the similar region and they trade at valuations that are lower than what this deal has been completed at. Finally, this could result in some additional competition in South India. Well, if that's the case, then we'll see some kind of weakness on Ramco as well as Dalmia Cement, because they have been the big dominant forces in that region. But will they be challenged? That's the question in the time to come. For the time being, a good deal for Adani Cements as Ambuja Cements goes ahead and picks up Penna Cements. Back to you.
All right, Nigel, thanks a lot for that. Good deal for them, and that's reflected in the way we're seeing the move as well on a couple of these stocks. But it's the insurance stocks, the general insurance stocks in particular, which are in focus. ICICI Lombard, for instance, has moved to the high point of trade. Ticker team alerting that as well. There's data coming in for the month of May. Yash joins in with a roundup of the same. Yash, tell us.
Well, Mangalam, there's one story which talks about how the general insurance industry has been growing at a consistent pace of about 15% growth on a monthly basis when compared to on a yearly comparison. But importantly, ICICI Lombard in FY25, the current financial year, has had a very good start. April was a very strong month, upwards of 20%. And May continues to be the same strong story for ICICI Lombard. So May premium for the company is growing by about 22%. up to May, the premium is up again 22%. Market share also in April and May versus April-May 2023, that has also grown by about 60 basis points. And it's on the back of these very strong numbers that the stock today is not just at day's high, but it's made a new 52-week high today as well. Go Digit General Insurance, the company which very recently listed, April wasn't as strong for the company, but May has turned out to be a good month. The premium has grown by about 36%. Up to May, the premium has grown by 19%, and April-May market share has grown by about 11 basis points. Star Health Insurance, the May premium is up 16%. Again, it's underperforming the industry by about that 10% mark, which has been constant, except for the month of April. Up to May premium has grown by 19%. Star Health's market share amongst all general insurance players, that has grown by about 14 basis points, April and May put together on a year-on-year basis. But amongst standalone health insurance industries, its market share has contracted by about 252 basis points. That's a point of concern certainly for Star Health Insurance.
All right, Yash, thanks a lot for that. So that's about the insurance space, the general insurance space. Just keep an eye out on a couple of these stocks. JK Paper has now moved to the high point of trade. In fact, it's a big 9% surge that we're seeing on that stock. So a lot of these, non-FNO cash stocks from the broader markets picking up pace as well. Paras Defense is up around 15% right now. All Cargo Gati is the other one, which is up 12% as well. So a bunch of these stocks actually spiking as we speak. Lemon Tree Hotels up 3%. Street factoring in some improvement in occupancy for the Mumbai Aurika, and as a result of which, improvement in their operational performance as well. We're seeing some traction come by in names like Idea Forge as well. Idea Forge has moved to the high point of trade as well. So looking good for the broader markets and the frontline index. And on that note, we will wrap up on this edition of Chartbusters. But as we do that, we would once again like to thank you, all our viewers, for your continued support. CNBC-TV18 recorded a viewership of 93% on counting day for the most unbiased and accurate coverage. Stock markets were reacting to the votes being counted, and we had a viewership of 91%. CNBC-TV18 beat competition by a massive margin. From investors to India Inc., the CNBC-TV18 election headquarters was the go-to for election insights. Once again, thank you for your trust and faith in CNBC-TV18.